Hello, everyone, and good morning. Thank you for joining our hangout on small business financing and how to get it. We have a great guest with us today. We have Meredith Wood from Fundera. She's the editor-in-chief over there, and she's going to be kind of talking about the different options available on small business financing, how to get it, any questions you guys might have on it. I'll have some questions of my own, I'm sure. It's going to be a good one. So, Meredith, I'll let you introduce yourself here.
Awesome. Thanks, Colby. Like you said, I am the editor-in-chief at Fundera. Fundera is an online marketplace for small business loans. We help small business owners navigate the new alternative lending space that is out there. And I oversee all the content that we produce that helps educate business owners on their options so they understand, what's out there, and if they want to apply for a loan, how do they go about doing so. So I'm constantly talking about this subject. Every day we talk to borrowers and understand the questions that they have. So we're going to walk through the process, go through some of those FAQs. So by the end of this conversation, you should have a good idea about what sort of financing options are available to you and what you should do if you are in a position that you need funding.
Awesome. That sounds great. Yeah, and I know there's definitely a lot of options out there for funding from what I've been learning recently. So. And I think we got some slide decks going on here. So I guess we'll start with the first and basic question. Why would your small business need some funding?
Yeah, so this is a question that we like to address. A lot of times there is a stigma around funding. Businesses assume that if you need a loan, it's because you're doing poorly, that you've made a bad business decision. But really, most of the time, it's because your business is growing and you need capital to keep up with that growth. So oftentimes, it indicates a good thing. And so that's something to keep in mind, kind of erase the stigma around small business funding. But more importantly, what we want to talk about is, should your small business get a loan? So once you're in a position where you think, I think I need money to reach my next goal, or to get through an emergency, or to get through a cash flow crunch, how do you figure out if it's something that you should actually pursue? So if we can click over to the next slide. We like to talk a lot about the cost-benefit analysis and really thinking about a loan as an investment in your business, because that's what it is. So for whatever the reason it is that you need this loan, let's say you need it to expand to a new location. If you can clearly say that by putting this money into my business, I'll be able to get more out of it than I spent on this loan, so that's the total amount lent plus all the fees associated, then it's worth it. So it's that common cost-benefit analysis. And if you can't say that the benefit outweighs the cost, you might want to examine alternative solutions. So if we forward to the next slide, as well, a lot of people ask, okay, so I understand cost-benefit analysis, but I'm trying to see how much is okay to borrow, because I think that that's a difficult situation to navigate. So what we like to tell borrowers is, when you're thinking about how much you should ask for a loan, look at the cash flow you have every month, the cash you have in hand at the end of every month. And if you would divide that by 1.5, it should be greater than whatever your monthly debt payment is going to be. So whether you're paying daily or weekly or monthly, the combined amount of those payments on a month basis should be less than whatever your cash flow is divided by 1.5. And that's generally a good place to start to make sure you aren't overextending yourself with this loan. So if we want to jump forward again to the next slide.
So just before we get into that, like for what's considered a good investment, if they're looking at it and they're doing this cost analysis for it, what do they have to do to prove that that it's actually going to be worth it for them and the person lending the money to them? Like, what do they have to show up with to show those facts, basically?
In terms of application?
Yeah, like I guess just application, or how, if I was going to say, hey, yes, I have this great business idea, I want to get some funding for it. I think I'm going to make this much, I'm spending this much, this loan is going to help me get here. How do they have to prove that? Like, do they have to have is it just straight documents, or do they have to have like a product example in some cases, or anything like that?
Absolutely, that's a really good question. So first of all, it's going to depend on the type of lender that you're dealing with. Banks and longer-term loans are going to require more extensive documentation. Banks are also someone that might be interested in your business plan and understanding a bit more about your business and how you operate and how you plan to meet these goals. Where if you're looking at shorter-term loans, something that's a quicker cash advance, quicker payoff, they're going to require smaller documentation, shorter documentation, just a few things to get through, so they won't be as concerned with proving how you're going to pay back as much as they are identifying your financial health, if that makes sense. So it's difficult to answer because it's case by case, but be prepared if you are going for a longer term loan, an SBA loan, a bank loan, that you'll need to be able to prep a really great business plan that will actually map out, you know, how you're currently making money, how you plan to continue to make money with this investment, et cetera, et cetera.
Okay, perfect. Yeah, that's great. Awesome. Thank you. Sorry.
Yeah, no problem. No. That's a great question. So to kind of get your mind brainstorming about what makes a good investment versus a bad investment, obviously it's hard to make a declarative statement on this. It's best to sort of maybe seek someone out that you can talk to, whether it's an industry peer, someone else who's gone through a similar process, an investment advisor, somebody that can help you navigate the situation, identifying financially what this means for your business. But from what we've seen, some really good uses for a loan is when, for example, let's say you're an inventory-based business and you purchase inventory in bulk because you're going to get a great discount, and you know for a fact that you'll be able to move that inventory off your shelves quickly. This is a good use of a loan because you can identify the fact that putting this money in will help you make more money down the road. Likewise, let's say if you're a restaurant and you know that if you expand to a new location, you'll double your sales, that's a good investment. And here's just a few more mentions of other things we find to be good investments. Bad uses are things like, for example, if you're trying to update your decor, that's very hard to say that that's going to affect your bottom line. So it might be a better course of action if that's something you want to do to look at ways to cut costs, or maybe create a savings plan where you put aside a certain amount a month, and in the next year you work towards those improvements. As well, paying yourself a salary. I know that's sometimes hard, especially in the early years of a business, to get to the point where you make enough where you can pay yourself. But taking out a loan to do that isn't worth it because the cost associated with it, again, it doesn't quite affect the bottom line. So it's better might be to find ways to cut costs so that you can actually make a salary off the business that you're doing. So any more questions on sort of the good and bad uses of the investments?
Yeah, I guess when you said not to update the decor or pay yourself a salary, I get the pay yourself a salary. It's if you're using a loan to pay yourself a salary, it's not really paying yourself. You're gonna have to pay that back eventually. But for decor, what if you were just like rebranding your business? So you went down one way and then you're like, hey, this isn't really going to work for me. I want to kind of go in a different direction and re-update everything and relaunch, reinvent ourselves.
Well, that's definitely a good decision to make in terms of your business, to pivot, to know that you need to do that to save your business. But I think this is what I said, it's hard to make a declarative statement on it, and it might be best to talk to someone about that, because if you can try to conceptualize as much as possible how that pivot will actually increase your business, increase your sales, whether it's through research, maybe reaching out to a similar business in a non-competing location that did a similar thing, giving yourself enough proof is that it would be a good investment. That might be a good situation, but again, it's not as black and white as understanding, oh, I ran this marketing plan last Christmas season and it worked so well, so I know if I invest the same amount of money this year, I'll get the same result. It isn't as clear, and so that's a situation that if you're going to move forward with that plan and need funding for it, make sure that you do as much research to verify that it will be as successful as you think it is in order to take out a loan for that. And if you aren't quite sure, and again, might be better to think about maybe trying to do a business credit card or something, maybe a personal loan, something that isn't as related back to the business.
Awesome. That sounds great. And I just want to encourage anybody else that's watching, if you have any questions at all, feel free to post them. We're watching in the comments as well as I'm keeping an eye out, so I'll definitely be sure to ask them on air if we get some submitted. And then I'll let you move on. It looks like we're going on to bank loans.
Yeah, so once you've gone through the process, you're like, I understand that the benefit of this investment will outweigh the cost. I understand approximately how much I can afford to take on in terms of a loan. Now it's time to think about the options out there and which might be the best fit for you. The first place that I always recommend small businesses consider is the bank, and that's because the bank is going to give you the lowest priced option. They, without a doubt, have the lowest interest rates. So if you want a loan and you don't want to spend a lot to incur it, a bank's going to be the way to go. But obviously, with good, there's bad. The thing to know about bank loans is they can be somewhat difficult to secure, and I will expound on that later. They also have lengthier applications, so be prepared in the process, like we were saying earlier, about needing to have things like a business plan. Again, every lender is different, every bank is different, so the applications differ, but overall be expecting a lengthier application than you would find with an alternative loan. And lastly, the time to funding is a lot longer. It could take months to actually get that cash in hand. So if you're in a cash crunch, it might not be the best option for yourself. But if you are considering bank loans, a lot of questions we get are kind of trying to figure out if they should pursue that option. So one question is figuring out if you're even a good candidate for a bank loan. Like, I understand that it's going to take a long time to get funded. Should I take that time? Am I wasting my time? So am I a good candidate? And that's hard to say because, like I said, you never know unless you actually apply for a loan. But if you're personally and financially healthy and your business is financially healthy, you definitely stand a good chance. You know, if you've got a personal credit score over 700, if you've got a bank balance that's pretty strong monthly, maybe about $10,000 or more a month in your actual bank account cash-wise, you've got monthly sales over $30,000. Those are good numbers for a bank. But again, you never know. We don't know. Do you have a suit or a judgment out on you? Things like that. There's so many factors that go into it. It's hard to say whether or not someone is a good candidate for a bank loan. But if you can say confidently that your business financials and your personal financials are in good shape, it definitely is worth putting in an application with a bank. Another frequently asked question we get is, where do I go to get a bank loan? I mean, it's obvious you go to a bank, but which bank? And the first bank you want to try is whomever you have a relationship with. A lot of times that can be taken into the application process because they understand how you work, they understand your payment habits, et cetera, et cetera. They have more information on you. But if you want to try another option, I always say community banks are a great option. They have higher approval rates than the bigger banks do.
Awesome.
And the last one is the overall application process. What is that like? I say, you know, be prepared to produce extensive documentation. You're going to pull your balance sheets, things like your profit and loss form, and business. If they're not the bank you bank with, you'll need to show your bank statements for a couple years. Normally speaking, the longer the loan term, the more material you'll need to prepare for the application. If you're going to collateralize the loan, you might need to get some paperwork, get an auditor on something like real estate, things like that, to understand the valuation. So there's a lot that can go into it, but again, like I said, it varies lender by lender, and so it's really a question that you need to ask for the person that you plan on applying with. So that's bank loans. Do you have any questions on that, Colby?
Yeah, I do. So, with banks, how personal did they get? Is it something where they just look at numbers, or did they take into consideration other factors as well? Such as you have a bad credit score, but you have a previous good running record with making businesses successful, stuff like that.
Yeah. So, like I said, again, it's a case-by-case basis. I've known people that have had success at the bank, although having a bad credit score, and it's because, like you said, everything else in the application could be so strong. But they all have their different underwriting processes. But I think that's what's great about working with a bank that knows you, or a community bank that takes the time to sit down and really understand you, is they'll have a better advantage of understanding the full spectrum of your business. So it definitely is possible, but like I said, it's really hard to say whether or not it will happen. But it's definitely a good thing to go into a bank and have a conversation with someone that works there, so you can get an idea of what their habits have been in the past in terms of lending, because everybody has different requirements.
Gotcha. And kind of on the different requirements, do different banks favor certain business types over other banks? Are there certain business types of online business that are harder to get?
Definitely. And again, it depends bank to bank. There are some industries that a certain bank would consider inherently risky versus others. It just depends, and that's a great question to ask them outright, whether or not they have any hesitancies working with somebody in your industry. I find that more with online lenders. Some people, actually, it's kind of the opposite. They work a lot with a particular industry, so they feel very comfortable underwriting businesses in that industry because they have an understanding of how the business model works, how the cash flow is in and out. So, but I do find that a lot of people have, from past experiences, have a particular opinion on industries, so it's great to ask them what their opinion is. But again, never be discouraged by those things. Still apply, see what you can get. But it is good to ask those questions beforehand.
Awesome. And I understand I was getting some echo earlier. I'm not sure if I still am. If I am, I apologize. People are trying to take a look at that. But Meredith, I'll let you.
Awesome. So as I said about bank loans, there's something about them that it's very difficult to secure right now. Right. To be frank, small businesses simply aren't getting the capital they need from banks. You've got 27 million small businesses, and you've 5 million who need funding, but they're not asking for it, whether they're intimidated by the bank applications or they're intimidated by the process and they don't want to be denied, they think they're going to waste their time, or you have the 12 million that are seeking funding. So that's 17 million small businesses that need money, and only 3 million of them are actually getting funded from the banks. So that paints a very good picture of how little banks are lending to small businesses right now. We'll jump to the next slide. We can actually discuss why that's the case. So right now, with everything that's happened in the past couple of years, their government restrictions have become tighter on the banks because obviously these loans are made with our money. And small businesses are inherently riskier than larger businesses. So these banks need to have less risk on their portfolios, and small businesses are considered risky. And as well, it's not profitable for them to underwrite and service smaller loans. It costs them the same amount of money to underwrite a $50,000 loan as it does a $1 million loan. So they're a business too, and they're going to make a lot more money off that $1 million loan. So that, for them, is a better use of their time. And you'll find with small businesses, often they just need smaller amounts. They need 10,000, they need 25, 50,000, so whether it's to get through that emergency or get through that cash crunch. So you can understand why, for banks, they're not necessarily the ideal borrower. And moving forward to the next slide. So those numbers can be discouraging, but I think don't be, because just as tends to happen when there's a void, technology comes in to fill it, and that's just what's happened here. So small businesses aren't getting the funding that they need from banks. So that's why the alternative lending industry is booming. Last year they did $3 billion in loans. It's a huge industry. It's growing year over year at crazy percents, and I think it won't become long before that's actually the norm for both consumers and businesses to get funding. You may not be familiar with the alternative lending industry, or you might have heard the term thrown around and you aren't quite sure what it is, but it essentially encompasses anybody that's a non-bank institution that makes loans to consumers or businesses. There's a lot of pros with alternative lending. There's really fast time to funding. Some people can get funding in days. So if you're in a cash crunch, it's a great solution. They also have shorter applications. As I said earlier, you can expect the paperwork involved with an application to mimic the actual repayment term of a loan. So if you have a 10-year repayment term on a loan, you're going to have a longer application. But if you only have a 3 to 6 month repayment term on a loan, you're going to have a very short application to complete. So if you don't have a lot of time to prepare paperwork, that's also a great option. There's also a lot of diverse products, so depending on what your need is or the collateral you have, you actually might be able to find a product that's a better fit than a traditional long-term loan. And there's also options for those with bad credit. As we were getting to earlier, I think that that's a big thing that we come across, is that people, their personal credit score, it is a factor, but they're still recovering over maybe something they've dealt with in the past. And so maybe before they weren't able to get a loan because the loans were through the bank, but now they have those options with alternative lending. But the thing to keep in mind is, like I said, with good there's always bad. The cons is that the fees will be higher. You will pay more for a non-bank loan. That's just the facts. And it's also becoming increasingly difficult to know where to go. I mean, if you were to Google small business loan right now, I honestly dare you to Google small business loan right now, and you will see that everybody is saying the same exact thing. They're saying fastest time to funding, best customer service, best rates. But as a shopper, how are you supposed to know, first of all, that's true, who's legit, who's the best? So it's becoming really difficult to understand which alternative lender is the way to go. Do you have any questions on that, Colby, before I move forward?
I do, yeah. So when you say alternative lending, what's your favorite type of alternative lending, I guess personally, or that you see people typically go to the most? And what do you think of like crowdsource lending, like Kickstarter or something like that, basically?
Yeah, so those are great questions. It's hard to pick a favorite because I think my favorite thing about alternative lending is that it meets different. It's more customized to people's needs. I love the SBA loans. I love that they have a lot of different options, and I'll expound on that a little bit later, depending on what your business is looking for. It's a great way to get relatively affordable funding. But I also like the short-term loans. I think that for the first time ever, for those small businesses that need cash fast, they need a small amount, and they don't want to be with the debt forever, it's a great option there. So those are two of my personal favorite products. But again, I'd have to say my favorite thing is that there are a lot of different products that are customized to fit different needs. And for crowdsourcing and crowdfunding, I think it's really interesting. I think we've only just scraped what's been with that industry. I think that it can be difficult depending on what type of crowdfunding it is. Some of them you might have to give away equity in your business, and as a small business that might not be something you want to do. There's also a lot of work that goes into it. So if you have really great marketing chops, I think it's awesome because you can probably build a really awesome crowdfunding campaign and have a lot of success there. But it will take more work to do so. So going back to evaluating, I need cash fast, or I just know I want to raise money for something down the road. I think if you have the time to put into it and you've got a really good sense for how to promote things, it's a great option. But again, like I said, I'm really excited to see how that industry continues to develop, because I think as it matures, we'll see a lot of really interesting options for businesses down the road. So it's important as a business owner. It's great that you're watching this, that you've tuned into this, but to stay educated on the space so you're aware of those changes and those options as they do become available.
That's great. And actually on that, we do have a question that kind of, I think you touched on it a little bit, but I'll just make sure we get a clear answer. Paul Cheney wants to know, as alternative lending becomes more the norm for small businesses and people, do you anticipate that the approval rates or the rates that they give out those loans will decrease instead of increase?
So that's actually a really good question. I think it's tough to answer, and again, this is just my personal opinion. I think that the number will be interesting because as more people apply, there will be just more general declines. But I think what's going to be interesting with the alternative lending industry is that their underwriting process is actually going to is going to perfect with time, mature with time. So they'll be better at predicting risk. I think that rates will continue to lower as their underwriting process matures. So, because right now I think approval rates are at like 60% for the alternative lending industry, which is really, really great. So I would suspect that they would actually maybe hopefully stay the same, if not get higher, just given that their models can kind of, with the times, and they're really working towards adding in new information like Yelp reviews and social activity and things like that, which I think is really interesting, and I'm curious to see how that forms over time. So my genuine hope and what my school of thought is that approval rates will go up. But again, I could see how one might think that as more people apply for this, maybe it'll even out or decline a little bit.
Awesome, that's great. And I guess on that, because you said the approval rates for the alternative loan, you think we're around 60%. What do you have an estimate on what the approval rates on like a traditional or a bank loan is currently?
So I do have them somewhere, and that's something that I can send you after Colby. We actually are about to push an infographic out today with that information on it. So I think of their total business loans that banks give, they're at about 25% of them are small business loans. But I don't actually have numbers on the approval rates because I think it's very hard to find that information aggregated. So that's like a really rough figure to paint that, but does that help outline that a bit?
Yeah, absolutely.
Yeah, so about 25% of total business loans that banks are giving are going to small businesses.
That's awesome.
Awesome. So do we want to move on to the next slide?
Yeah, let's go check it out.
Awesome. So I just had a fax come in. There's actually, to answer your previous question, I don't know approval, but I can say that they've got about an 82% decline rate at the banks. So
oh, wow.
That also sheds some light onto that picture, which is a great question. And hopefully a number that will go down, but we'll have to kind of see how things change over time. But jumping back into the different financial products that are available to small businesses online. So you understand what alternative lending is, but let's go product by product and see various options that might be available to your business. So the first one, which I said was one of my favorites, and again, all of them, they're like children. Like you don't want to pick one, but you kind of do have a favorite. I'm just kidding. That's not true. But with with SBA loans, SBA loans. So the SBA is not actually making these loans, but an SBA loan is a government guaranteed loan, and it's backed through these various community lenders that work with the SBA. And what's great is they have all sorts of loans available. They have the 7A loan, which is a general loan for general business purposes, working capital. It can also be used to start a business, open a franchise. But they also have loans that are specifically for equipment, or if your business is in a declared disaster zone, if you're an exporting business, they have some things available for you. So it's really valuable to spend some time on their site or even talk with an SBA community lender to kind of shed some light on what the different options are, because you might have an advantage applying for a loan that is particularly in with your niche, whatever it is your business does. It's definitely going to be the lowest priced alternative loan available. This is where you're going to see single-digit interest rates. And it's also going to longer payment terms, so we're talking 10-year loans. And some people like that. They want to have a long time to pay off the loan. But for some people, they don't want to be stuck with that debt for that long. So that's something to evaluate going into the process. The SBA loans are going to be the most similar to a traditional bank loan. There will be a lengthier application process. It'll be a little bit longer time to funding. And so that's just one thing to keep in mind, again, as you're thinking about what might be the right option for you. If you need cash fast, you might want to consider a different option.
With the length of loans that you're talking about, because you said some people don't want to be stuck with a longer loan, is there a fee or a disadvantage to taking that loan but then paying it off early? Do you get penalized for that in any way?
So there are prepayment penalties with various loans. It's a loan-by-loan basis, and that's a great question, Colby, because the one thing you want to make sure you ask lenders, and as you're going through the paperwork you want to look for, is that do they have a prepayment penalty? Because many do. That basically that if you have a loan and you try to pay it off early, you're going to have to pay a fee for that. So that's something to ask and be prepared for, but it is a loan-by-loan basis.
Awesome. Cool.
Yeah. So jumping in, just like a bank term loan, there are online term loans available to business that operate very much in the same format, where you get a sum up front and you pay it off over a certain period. So what's interesting is they have the more medium-term loans like you would see at a bank, but they also have short-term loans, and this is something I referenced earlier, again, is one of my favorites. So if you're in a business situation where you need cash fast and you need a smaller sum and you don't want to be stuck with the debt forever, a short-term loan is a really interesting option because you can pay that off sometimes in 6 months, and it can be for that smaller amount. And the nice thing about that is if you're in that situation, you just need a little bit fast, it could be a great fit. They also have different repayment structures. Some you pay daily, some you pay weekly, some you pay monthly. So there's all sorts of combinations of ways you can go about getting these alternative term loans. But again, these are going to be higher priced, so you want to shop around a bit and see the different structures and see which gets you the most cost-effective loan. And jumping into another type of option is invoice financing or factoring. So if you're a business that invoices for your services or your products, this could be a really interesting fit for you because your invoices are essentially serving as collateral. And what you do is you sell you sell your invoice to this factor or this finance company, and they'll upfront you 80%, just about, that's give or take, the amount can differ, but let's say 80% of the total loan amount. So you get 80% of the total loan amount, and then they're going to keep 20%, the other 20% in reserve. So when the customer pays, you'll get that reserve amount back minus whatever the factor or finance company's fees are. And the fees tend to be one flat fee, which is usually around 3%, give or take, that is there because they extended the service. And then what they usually do is a percent fee for each amount of time that the invoice is outstanding. It's usually weekly. Some could do daily, but let's say it's 1% per week. So it takes the customer 2 weeks to pay. And so when you get back that reserve amount, it would be minus the 3% flat fee and minus the 2% factor fee. So you would get 15% back of that invoice total, meaning you get 95% of the invoice amount and they got 5% of it in fees. I know that was a lot to take in, so I'm always happy to expound on that more a little bit later, or if anyone has information on that, I can send them like a written out description of how that works. And that's just one example. There's invoice discounting and financing. There's some online versions of invoice financing. Everybody's fee structure is a little bit different. So again, that's something you want to ask to be clearly explained. But I also want to touch on that you're going to see the term invoice financing, invoice factoring interchangeably, but they're not really the same thing. With a factor, it's someone you sell the invoice to, and they actually take over the collection of the invoice. So for some people, this sounds like a godsend. It sounds awesome. Someone else will be dealing with your customers, making them pay you on time. But for others, that's a little bit nerve-wracking. They don't just want to hand their customers off to someone else. So that's where invoice financing might be a great option, where the factor doesn't take over the collection of the invoice. You keep that in-house. You get to maintain the relationship with your customers. So that's something else to keep in mind, is which sounds more desirable to you.
Yeah, I think that's a good point, especially for small businesses. Customer service is very key, so it could be a little nerve-wracking, kind of relinquishing some of that control over to a third party to call up your customers for payment, especially, which is a touchy topic for a lot of people.
Oh yeah, I think for larger businesses, it makes a little more sense. They don't necessarily talk to their customers as much, but for a small business, those relationships are so crucial, and it can be scary to do that. But again, for some people, maybe it'll save them a ton of time, and it sounds great. So going on to the next option are equipment loans, and the best thing I like to compare equipment loans to are car loans. So essentially, with a car, you have an option to either you lease a car or you buy a car, and it's just like with equipment. You can lease it, but you're not going to own that. But when you get an equipment loan, it's just like getting a car loan. So basically, I'm sorry, you'll get the lender will allow you to pay for the total amount of the equipment up front, and then over time you pay back the lender for the cost of the equipment with whatever their interest fee is. And that repayment period tends to mimic the actual life of the asset, so it's not going to extend any longer than the life of the asset. It could be shorter than that, but the thing to keep in mind is that you get to own this equipment in the end. And also, if you're going to pay cash up front for equipment, that can be a really large total, so that might not be something that you want to do. You might want to put your cash in other parts of your business. So you do know that the equipment loans are available, and the equipment serves as collateral, which makes securing the loan a bit easier.
Awesome.
Yeah, and now jumping into lines of credit. This is another one of my favorites. Again, I don't have favorites, but if I did have a favorite, it would be lines of credit. And I like to compare them. They operate very much like credit cards, and it's through this financial institution. They extend you a certain credit limit. So let's say your credit line is $50,000, and you can pull on that at any time. And the great thing is you only pay interest on what you use, and they tend to have lower interest rates than credit cards. So if you're thinking about getting a credit card to help get through some financial tough times or to help start a certain project, a line of credit can actually be an interesting alternative because you can get those lower interest rates. And one thing that's also advantage, and this doesn't really apply a lot in this day and age, but for some businesses it is important, you actually can pull cash with your line of credit versus with a credit card. When you try to stick your credit card in an ATM machine, you're going to pay crazy fees to get that cash. So if you find for whatever business transactions you have, you need cash, that's again another advantage of a line of credit. Any questions on equipment loans or lines of credit?
No, not so far for me. I think you're doing a good job of kind of explaining all the differences. I guess I touched on why would line of credits be one of your favorite. Is it just because of the ease of use and how straightforward it is?
Yeah, and actually I'm glad you said that, because I didn't bring up something that I actually like about lines of credit, and something I haven't really talked about too much yet. But so going back to why would your small business need funding? Oftentimes, most time I should say, people, they go for funding, they go for financing when they absolutely need it. They have a dire need, and if it's for their financials could not look super great for whatever reason that is. So really, the best time to look for financing is when you don't need it, or when you can predict very long term down the road that you do need it. So that's why having really strong financial practices like monthly cash flow statements, consistently running your balance sheets, having a good idea on the cash that's in your business, you can make that prediction far in advance, is a great business practice so that when you go to find funding, you look financially stronger and able to get better terms. But with a line of credit, what I think is interesting about that is it's a great way to have an option to get funding when you need it down the road. So you apply for a line of credit, and it can last for a long period of time. So you may not necessarily need all that money right at that moment, but you have that option to pull from it when you do need it. So instead of going through the process of searching, shopping, and applying, when you have that dire need, you've got that line of credit you can pull from. I think it's also really valuable to build up credit as well. So when you're trying to work on your personal credit score or your business credit score, a line of credit is great for that.
That's great. That's a good point too. Like preemptively preparing for stuff. You never know if like a natural disaster could occur, or if you have to expand really rapidly all of a sudden. And that's nice to know that that line of credit will just kind of remain there over time.
Yep, definitely. And lastly, the last product is a merchant cash advance, which, to be upfront, is going to be one of the most expensive products out there. But if you have a bad credit score, it's a great option for you, because what they do is they give you a certain amount of cash up front, and then they have their fee, and you pay that loan they provided you plus their fee from your daily credit card sales. So they take a set percent from your daily credit card sales. So for them, it's more important what your sales look like versus your credit. And the other thing to keep in mind that's great about this is, since they're pulling a flat percent from your daily credit card sales, when business is going well, they'll be able to take more from the loan, but when business might be a little bit slower, they'll be taking less. So it kind of mimics the highs and lows of your business. But again, this is cutting right into your cash flow, so you've got to go back to that cost-benefit analysis and be very sure that this investment is actually going to be one that has greater benefit for your business than what it will actually cost you.
Awesome.
Questions there?
Not on there. So I do have a general question. Looks like actually from Amit Davey. He said, "Hey, I'm into informative business, website business. I want to expand my business, and I need funds for that. How can I get it?" And I know we just touched on a lot of different lending types, and we might not be able to recommend a specific one, but the alternative lending is might be where he wants to look at. If it's for like online business, maybe he could put up like something for servers for collateral or anything like that. But do you recommend just him going into a bank and kind of talking that over?
So the process that I would tell Mint is, the first question is to ask, what sort of timeline do you have? Do you have a few months to look for this funding? Because if you do, then definitely go talk to your local bank, whether it's the bank you bank with, find a community bank, ask them, are you a good candidate? Do you have a shot? And if so, put in an application with them. If you're denied, consider alternative lending. Or if you need funding fast, consider alternative lending. And my recommendation would be to obviously work with Fundera. That's actually something I was going to expound on a bit later. But what we are is we're an online marketplace for small business loans. So what you can do, Mint, is you can fill out a singular application, and you can see all the options available with you. So the one thing that you want to know, and you'll be able to talk with someone that will be able to ask you questions about, what's your business revenue, what is your average bank balance, what's your credit score, all these things, to be able to identify what is the best option for you, because it's hard to tell you what the best option is without knowing the facts and figures like sales, average bank balance, credit score, and more about the industry, those sorts of things, if that makes sense. But I would kind of evaluate where you want to start. Do you want to start with a bank, or do you want to start with the alternative lenders?
And you kind of beat me to it. I was going to say, so Fundera, and I wanted to touch on this a little bit later too, kind of seems like it takes the scariness of having to sort through all these options and makes it a lot simpler for people that are looking for financing for their small business or business in general.
Yeah, I think something that I had said earlier, and if we want, we can actually skip ahead to the next slide. It covers this question and feeds very, very well into Mitt's question. And the cons are, obviously the higher price loans, but more so trying to navigate the space. It can be a little bit intimidating. So my first recommendation is always to ask your friends or your industry peers. Believe it or not, people aren't always quite upfront with the fact that it's not just cocktail conversation that they got a business loan. So you'd be surprised when you ask someone to find out that they actually have. And I really like going to industry peers. A lot of people are members organizations that are relative to their business. So if you're part of the National Home Builders Association, and and reaching out to people in that group and asking them what they've done, because there's, like I said, there's a lot of lenders that have particular experience with an industry. So that's a great place to start. But if you can't seem to find a good resource there, or you gather some information but don't necessarily have the whole picture, another great place to start is a marketplace like Fundera, because what we're doing is we're creating one place for you to shop for your loan option. So you fill out this one-page application, give us all the important information that we need to help get a good understanding of where your business is, what your business is, and we provide you all the different loan products that you would qualify for. So you have an idea of, let's say you qualify for short-term loans, an SBA loan, and invoice factoring. And you see that you qualify for all those things, and then you're able to select which products you want to move forward with. So let's say you want to give them all a try and see what your best offer is. So you select all the loan products, and then going forward, you only fill out one application. So you're only uploading one balance sheet, one profit and loss form, and again, it depends on the lender. Everybody asks for different things. One set of bank statements, and that one application gets sent out to all the different lenders. So you'll see all the different offers that you get, and you're able to compare the different rates. And the nice thing that we like to say, it's a one-stop shop. You get one shopping experience to see all your different alternative loan options. You have one application, so you don't have to worry about going lender to lender to lender to fill out different applications to make sure you're getting the lowest price loan. And then lastly, you have one point of contact. So we've got our customer success team that handles your account the whole way through. So we don't sell your information to lenders. So you've got 20 lenders calling you trying to sell you on their loan. They're trying to say, my loan's the best, or my loan's the best. Instead, you have one person who's completely lender agnostic, who's helping understand your situation and your needs and figure out which is the best fit for that situation. We find we are able to get people lower rates because these lenders are competing for their business. And most importantly, you have someone that's giving you true, unbiased advice. We will tell someone just as often if the loan just isn't the right option at all. For example, one of my favorite stories is we had a company come through that was a video game design company. And he got a loan offer, but on that loan offer, he was going to have to use his business assets as collateral, but for him, his business assets were intellectual property, so that's a huge thing to put up, and so it didn't really make sense for him. So our customer success team said, we honestly don't think it's a good idea, and he ended up getting funding through a friend and has been just fine and is a huge advocate of Fundera. But I think that that's what's so interesting and unique about the experience, is it really is having someone there to help you evaluate what is really best for your business.
That's awesome. So I guess that kind of leads me into one question. Do you guys provide like reviews of the different lenders as well, or is there a place that people can find different reviews for I guess different banks or different lending types to see like, you know, past history interactions with other customers and how they've treated them and everything like that?
Definitely. So the way for ours, we provide facts for the lenders. We don't work with lenders that I should say we have carefully vetted the lenders that we work with and trust that the people we work with are going to provide an excellent experience for our customers. So we don't have hundreds and hundreds and hundreds of lenders on our platform. We have a set number that we think are the best of the best. So we provide information that is specific about the lender. But honestly, the great thing about these being online lending institutions is that online there's a ton of reviews about these lenders. A great site is Trustpilot, so looking up an alternative lender on Trustpilot will give you a lot of information about past experiences. But I say trusting with Fundera is knowing that we have vetted these people for you, and we always tell people to put more emphasis through our platform specifically on products and lender. So look at the rates they're giving you, the repayments periods they're giving you versus who the actual lender is, if that makes sense.
Yeah, totally does.
Awesome. Cool. So that was the end of my slides. I'm definitely at a place where I can take some questions, perhaps expound or clarify on a few of the things I said. I know that was a lot of information and a short amount of time. If you don't feel obviously comfortable asking something publicly in the chat, like I said, to talk specifics about what would be a great loan fit or what you should particularly do in your situation, you're probably better off reaching out to me directly at meredith@fundera.com or going to our site. We have people live on chat who can answer questions. And you can also give us a call at 1-800-FUNDERA, and our customer success team will help be able to paint a really specific picture for you now, since they have more information about your type of business. But other than that, I'm happy to take other questions.
So if you have questions, people, submit them now. No, but thank you so much. This has been really good so far. I think you've shared a wealth of knowledge with everybody, and I think it's definitely answered a lot of questions for me, someone that really didn't know anything about small business financing, just kind of getting on here and asking my noob questions, so to speak, I guess. But yeah, if you had one tip for small business, what would it be? So
when it comes to financing?
Yep.
Gosh, I think that it's to get as much information as you can. It's a serious business decision. It's a serious investment, and really take the time to do the research to make sure that the people that you're working with are the best of the best, that the rates you're getting are the best of the best, and to feel really comfortable and clear about what you're getting into. I think that and this is something I didn't necessarily touch on a lot in the presentation, but when you go through the process of a loan application and you get an offer, you need to make sure that you understand everything that's in there. So do they have any fees that they charge outside of interest, like origination fees? Exactly what are the repayment terms? Are there prepayment penalties? Really take the time to, I know that I'm the kind of person that I never read the terms of service or anything like that but that's not near as important when I sign on things. So, but this is something that you don't want to skim over. You want to clearly read through and even maybe pass off to someone like your accountant. So that's something that I would definitely say is my #1 tip.
Awesome. Does Fundera kind of help with that too? Because I know you mentioned that your customer success team kind of goes through the loans a little bit and says, hey, this might be a good option for you, this might not. Do they look at some of those terms as well?
Absolutely. So when you receive an offer, we'll go through what it is, what it means, what the true cost of the loan is. And I think that's an advantage of working with a company like Fundera, is you have somebody that this is what we eat, sleep, and breathe. This is our language. This is what we know. And we know the spots that people tend to not understand or to overlook. And so that's something that our customer success team does, is that with each offer that you get, and especially the one that you decide to move forward with, we make sure you understand exactly what you're going to pay and how you're going to pay back and what will happen if you pay back early.
That's great. Well, cool. I don't see any other questions coming in, but like we mentioned, feel free to reach out either on the event page, through email, through Twitter, live chat on the Fundera website. Thank you everybody for watching. Thank you, Meredith, for coming on and going through everything with us. Everything was great.
Absolutely.
And I just wanted to let everybody know we do have another hangout tomorrow. It's at 10 a.m. PDT. It'll be on customer service in social media, a topic that's hits home for me. That's something I do all the time. So definitely tune into that. It's more details will be shared on our Google Plus page. And then also be sure to look at the GoDaddy Training Hub and the garage.godaddy.com as well for more blog posts. I know Meredith had a couple blog posts for us on there, and it's got more knowledge and more information on there. And it looks like we do have one comment. Looks like Paul says, really valuable info, very worth my time. Meredith rocks. You too. Thanks.
Paul.
Well, cool. I think that's it. And yeah, everybody have a good night, or good day, I should say. Sorry.
Bye.